Hello everyone, welcome to Trade and this series of course of videos that you're going to be watching to learn all the required technical analysis for day trading. First, we're going to start off with the candlesticks, different types of candlesticks, how a candlesticks is formed, and we're going to see what are the most important candlesticks and what are wicks and what we can make out of the wicks. See, firstly, I have this cheat sheet. This I've downloaded from Google. You can just type candlestick cheat sheet, you'll get thousands, but this is what I found, which is pretty good. And for some time I used to use this in my initial days. I used to even use this as a screensaver for some time just to get hold of everything. See, there are so many candlestick patterns and everything is important to know, but we will be looking for few which are strong reversal or strong buy points or strong sell points where we can identify. I'll be showing you the few important candles, but we will have to know everything because, for example, like a bullish harami, if a bullish harami is forming, see, we won't know which candle will form when, right? Now say the market is falling and the market starts reversing, so one of this candlestick pattern will be formed. So it's always good to know everything, but the most important ones we'll look for, and why it is important I'll be sharing you. So this is a cheat sheet that everybody can probably take a screenshot, or if you already have it, or you can just search on Google, you'll get it. See, now we'll see what are the candlestick contains. Right now, consider this as a red candle and this white one as a green candle. You have open price, close price, high, low. Okay, and the same thing for the green candle. You will have open, close, high, low on a green candle. And this, whatever this upper part you see from the whole candlestick body, right, the upper part that you see, the wick, the line that is formed, that is called wicks. We'll just explain that in a little bit more detail. We'll come to this most important candle. First we'll just see how this candlestick forms and how this wicks forms. For this I'll just try to now see. Now on this right hand side over here you see the price, right? Now I'll take example with this. I've opened a Banknifty chart. I've just closed all the price action just to get the levels. So using this I'll just explain about the open, close and high, low. Now just assume that Banknifty is at 36,200. okay, the candle opens here, either 15-minute, 1 hour, whatever it is, it opens at 36,200 and then the candle kind of comes down. Let me keep it as a big candle so that it will be clear. So say the candle opens at, we were at 36,200, right? Yeah, say at 36,000 the candle opens. Okay, when it is coming down, this portion will be in, say it opens here. Okay, so the candle opens here, so we will mark this as open. This is the open of the candle. So from here what happened, say the candle, as soon as the candle opened, it went down. So when this portion is in downside, right, you will see it as a red candle that is being formed. Okay, it comes to a certain point, this 5-minute or 15, whatever candle, right? Hope it is big enough. Yeah, so we opened here, we came all the way until, see, we opened at 36,200, came all the way until 35,755, and then the price starts going up. So when it starts going up, that leftover portion is where we will form the wick. So I've just drawn it again. So when this price starts going up, you will see this wick being formed, this line that comes in the candlestick, right, that is called wick. So now what happens, again the price is beginning to go up, so it will be still a green red candle until we are above the open. Once we go above the open, we start to form a green candle, right? Now this is the open, so we have made a low of, we'll mark this as the low. So, and this is this black line that I've drawn is the wick. So when we start going up, Now we have opened at 36,200. Now say assume this is a 15-minute candle. So in 15 minutes what has happened, we have opened here, we went down, it was all red candle that time. Then when we start going up, it becomes green, and say we go up to 36,500. Okay. Say we go up to 36,500, and then we make a high. So we have reached a high of 36,500. So we can mark this as the high, and then from here, if in case we fall, we will have a wick. If we don't fall, we won't have a wick. Now say we made a high and suddenly the candle closes at 36,400. So we end up making a high on the, we end up making a wick on the upper side, and this will be the close for a bullish candle. Okay, so this will be the close. See, always for a green candle, the open will be lower than the close, obviously, right? It is going up. This will be the low and this will be the high. Fine. Now we'll see how it happens for a bearish candle, how the red candles are formed. Right now, if you see now how this red candle and the green candles are formed. Now what happens on a red candle? We're going to see that. Now assume the price, let's just keep this here. Now just assume another example. The price opens at 36,400. Okay, this is the candle that is going to form. It opens at 36,400. It goes up. While it is going up, you will have a green candle, right? It goes until 36,590. So sorry, it goes, say it goes up to 36,600. So we have the open here exactly where we opened, that is 36,400. We have the high over here, and in case we start reversing, we will have a wick. So I'm just going to draw that and keep. So now say we made a high of 36,300 and we start reversing, that's when the higher wick is formed. This portion is called wick. I'll just write that this black portion, what is formed after the candle moves, right, is called a wick. So now we come back to our open price, and then from here we will start having a red candle because we are going below the open. Now say again we came until 36,000, okay, and then start reversing. If we start reversing, again we will have a wick, right? So say again we reversed until 36,100, and this will be the close. And say we closed here, this will be the close. Sorry, this is open, and this point will be the low. We made a high, open, close, low. So in a green candle, the close will be above the open. You'll have the high and low as usual. And in a red candle, you will have open and the close will be below the open. Below in the sense, see, we opened at 36,400 and we have closed at 36,100. And anything other than that, like we make a high and retrace, we will end up forming this wick. So this is our bullish, like a bullish green candle and a red candle is formed. We will be seeing the most important candles that is required now. Hope everybody understood what is the open and close. Now we say close below this level, right? See, this open and close is kind of like very important because in day trading, right, you will have to see if the close is, if this candle has closed below the open of this candle and stuff, right? So this open and close, understanding where is the open, where is the close is very important. So now we will come to this chart where I have drawn this, where we will be seeing the most important candles that is required. Obviously the names will be a little different because from where I learned, like how I learned, but most of the names are same. It's just Now say for this kind of a Marubozu candle, I just say a solid red or a solid green, and we have inverted hammer and doji. So but the understanding the what that candlestick is meaning is important. So let's see some of the important candles. That is, see, the bearish candles are inverted hammer. I'll be explaining why this is bearish, where to see the bearish candle, where to see a bullish candle. Now a candle like this where a body on top and a long wick at the bottom is called hammer, and the opposite of that is inverted hammer where you have the body down and the wick on top. Now these type of dojis are a neutral pattern which does not indicate a bullish scenario or a bearish scenario. Most of the times when we have a neutral pattern, it can be a point of reversal. And these are high wave candles, which are again like what do you say, indecisive candles, where you have a small body and a big wick on the other side. You would have seen many times, right? Now just one example of a high wave candle, we had this very recently. Now a candle like this, you have a green candle, you have a red candle with huge wicks on either side, so it's clearly indecisive on which way the market is going. What to do at these candles also will be explained in the next series of videos when we get this type of high wave candles. So these two are neutral patterns where we cannot take any decision. We saw one bearish where we have a small body and a long wick on the upper side, and sometimes you will have a small wick even on the upper side, but it has to be very small. Then you have a solid red, what a lot of people refer it as Marubozu candle, where it will be just one solid red candle. The same we have like a solid green candle. Then the most important on the bearish side, we have something called as an evening star. What is the evening star? You will have a green candle, you will have a small doji, and you will have a red candle. Okay, this is called as an evening star. It can be as perfect as this. See, sometimes what happens, you will see a candle like this. Now this is not an evening star. Now this red, like say the red candle comes and forms only till here, okay, half. This is not an evening star. The red candle should be at least engulfing or coming, like covering at least 80% of this green candle. Then we can refer it as an evening star. The same morning star, it's a bullish pattern where after a red candle you get a doji and you get a green candle. We refer it as morning star. But again, see, now we get a small green candle, like you get a red candle, doji, small green. This is not a morning star. We cannot refer this as a morning star. The candle has to be at least 80% covering this red candle, then we can refer it as a morning star. Now we don't have to sit and calculate the 80%. Visually it has to be good enough, covering at least 80-90% of this red candle, then we can refer it as a morning star. Then we have something called as bearish engulf and bullish engulf. This, the name itself suggests, that is, you have a green candle and you get a red candle engulfing the green candle completely. Now see this green candle, the upper side of the green candle also should be within this green candle, red candle body. The red candle should engulf the upper side and the lower side and make this like the strong red candle. We refer it as bearish engulf. The same thing for bullish engulf. You have a red candle and the green candle is completely engulfing it. Engulf means what? Like completely taking over, like covering. So the red candle should be completely covered by a green candle, then we refer it as bullish candle. And these are dojis, what in the regular term we refer it as a dragonfly doji if the wick is on if you have a long wick on the downside. If you have a long wick on the upper side, we refer it as gravestone doji. In simple, if you just can't always remember the name, remember one thing: if you get like this line and this type of a doji, right, and a long wick on the upper side, it can be a bearish pattern. And if you get a wick like this line forms, where, see, what this indicates is why we get this line. We saw open and close here, right? Now when will we get this type of a wick? When the doji, I'm going to show about when we get this type of this dragonfly doji, right? Say price opens here, we'll see for a red candle, the price opens here, the price goes down and comes back and closes where it opens. Then we will have this type of a candle when the price closes where it opens. And since it went down and came, we'll have a long wick on the downside. The same for that inverted doji, right? Now say price opens here, okay, it goes up, the price comes and closes at the same point. So since it went up and came, we will have this wick, and that is how this inverted dojis are formed. So whenever the open and the close is same, you will have this type of flat line. And in case we go up and come, then you'll have the wick on the upper side or the wick on the lower side. Now what do these candlestick pattern indicate? Now what do this candlestick pattern indicate, right? Now we saw the different type of candlestick pattern. Now what do they indicate? That is the most important. What can we make out of it? The bearish candlestick pattern indicates that the market might start reversing. Now say the market is going up, you see a bearish candlestick pattern. Now where to see, not that every bearish red candle the market will start falling. I'll be explaining where to say it. So once you see that bearish candlestick pattern, most probably the market will reverse. And the same thing for the bullish candlestick pattern. If the market is falling, you see a bullish candlestick pattern, most likely the market will reverse from there. Now where to see this? That is also important, right? We just can't see an engulfing candle, bearish engulfing thing, market will fall from there. For that, again, I'm coming to this chart. Now in depth of support and resistance will be in the next video. Now I'm just going to explain in brief where to see this candlestick pattern. Now say you have to forget about this price action. We'll come to the price action after I explain this. Now say we have one resistance line drawn and a support line drawn, either using pivots, CPR, whatever it is, or you have drawn it manually. You have a resistance line, you have a support, and the market keeps going up, okay? It comes close to a resistance. When it comes close to an and it has to be an important resistance, like on a higher time frame. On daily time frame there is a support, or an hourly time frame if there is a support or a resistance. So it has to be a pretty good resistance, okay? Now if the price comes to this point where we have this resistance, at resistance you will see if any kind of a bearish candlestick pattern is forming. Is it going to reverse from here, right? We don't know whether this is going to break out from here or reverse from here, right? So you will see if at resistance any of the bearish candlestick pattern is forming. So always you look for a bearish candlestick pattern at resistance, and the same thing on the bullish candlestick pattern. Now say if the market is falling, you are expecting, see, it's not only the candlestick pattern, there are other things that we see, which you will be seeing it in the series of videos, right? It's not just we saw a morning star, we will not buy, we'll see other things. But when the market is falling, we come to a very good support, and you see a bullish candlestick pattern. It should be a very significant support, not every 5-minute candle. You cannot see any kind of candlestick pattern. So at the significant support, if you find a bullish candlestick pattern, most likely the market will reverse from here. Now how long it will reverse, how far it can go, that and all we will be seeing in the later set of videos. But the important thing to understand here is we look for a bearish candlestick pattern at resistance and bullish candlestick pattern at support. Now let me just show you some examples of the candlestick pattern and how the market reversed from there. Let me get rid of these lines. See, I'm just using the CPR pivot for resistance support, but you can see in my videos that I would have drawn many kind of support and resistance, and the next video is all about drawing support and resistance and trend line, so stay tuned. See, the market went up, okay? Now what is the CPR, what is this purple line, red line, green line, what is CPR, that we will learn in the next series of videos. So don't worry if somebody is watching it, if hearing about CPR for the first time. Now say the market went up, okay, this was one resistance point we had. You see kind of this engulfing candle came along after that, but you still, it's not a perfect engulfing, right? For perfect engulfing, what we need? We need like the entire green candle should be engulfed. Then after that, at this resistance, we got this nice inverted hammer, and then see how the market fell, right? And all the examples I've marked. See, this was a classic inverted hammer, right? What we saw, the bearish candlestick pattern. See, this was a resistance. From this resistance, we got this on a I'm showing this on a 5-minute chart. See, before this, you would have seen a video what is trading view, investing, the different time frames that are there, right? So on this 5-minute chart, you see and we had a resistance here and a beautiful inverted hammer, and see how the market slipped, and we got this bounce, and even after the bounce, the market went down, right? Even then, see, once the market came down, the next resistance level was this level, the CPR. We came up, made this evening star, and then again made this inverted kind of a hammer, and then slipped. So these are the candles that where we look for confirmation. See, again over here, now say the price came down. You will be seeing more about drawing support and resistance in the next video. The price took support here, okay? It again went up, kind of made this doji, like an evening star, came down, again made this inverted hammer, came down. Now at this good support, you got this kind of a doji on the upper side, and see the way the market retraced on the upper side. Now this is a classic example. This was that fall when we had, this was the fall that we had during that war news came. We had a huge gap down, and on a Thursday, the last Thursday of the last February Thursday, we fell big, right? See, when it came, we went up, we kind of made an evening star. When you see two evening stars in a chart in a 5-minute time frame on the same day, most likely the up move won't sustain and it will break. Now this trend line breakdown and all that we will see in the next video. Just because we see evening star, we are not going to enter. How we build that view, we will be seeing in the next video. We will always be prepared when we see an evening star. The moment when a trend line or a structure breaks, that's when we enter. We will be seeing that in the next video. This is just showing the examples where the candlestick patterns have worked. Now see, over here we had a nice bullish engulf candle. Kind of this trend line broke, and see the up move that we got. Again from here where the resistance was there, we slipped. See the candles that was formed, all inverted hammers and doji on the upside, wick rejecting this. See, now what this states here is, when we came to this resistance, the sellers are more aggressive. You can see it in the candlestick pattern itself. Maybe this one candle you saw, but you still waited. We kept forming the dojis on wicks on the upper side, so showing that there is a rejection over here. Finally we got like one solid confirmation when this big red candle was formed, and then see the dip we got. This type of candles, this type of reading the charts and the candlestick for intraday scalping is very important. Now again over here, now intraday, this move was happening, okay? Each time you're coming here, going up. So what you did over here, you had like a resistance line drawn. We came close to that resistance, made a lower high and perfect evening star, and then see how the market fell. From this evening star, the market fell about 370, 380 points. Even half if we had captured. See, it looked like on this day, it looked like we are opening with a nice bullish candle, okay? But why this bullish candle didn't work is we were not at a significant resistance. See, at this point the resistance was here, the support is here. At the support we got a good, what do you say, a bullish candlestick pattern. Then we got a neutral candlestick pattern. The moment this kind of an engulfing red candle came, right, like a big one, see the kind of fall that we had. Even after this candle, if we had entered, now say we are very safe traders, we trade only after getting confirmation and stuff. So after forming this big inverted, like engulfing candle, even after this, if we had entered, we would have got 370 points. The best entry was here. Now how the best entry was here, we will be seeing in the later videos, but a very safe entry was here when after this candle formed, the next follow-up candle started coming, right? After that, you see how long the market fell, 360 points. So like that, you'll find many examples. You can always go back, do some back testing, and where are my drawings? Yeah, you can always go back and do some back testing and check. But these are the most important candles that I would use. And see, if it's not, I'm not saying that these other candles are not important. Even this is important. It's nothing but it's just a diagram, right? We just have to mug it up. That's it. There's no any logic of understanding apart from this open close how the candlesticks are formed. Now the other things are like, say, like a tweezer. Where is tweezer? Like this tweezer type of candle. These are all, you'll see it. But the most important one that works are these, what I've shown here. Made this thing. So you can use this candlestick pattern and do some kind of back testing and see. Most of the time we have reversed when we have had this type of a candlestick pattern. So that's it with the candlesticks. On the next video, we're going to see support, resistance, and trend line.